everybody, Brian Matthey from Verico the Mortgage Professionals, and welcome to another edition of Mortgage Straight Talk. In today's edition of Mortgage Straight Talk, I'm going to be talking about shopping for a mortgage. Let's face it, a mortgage is the single biggest loan you're ever likely to make. So it's very important that you're dealing with somebody who has the financial knowledge and the background to guide you not only in getting the mortgage, but to help you in planning that mortgage for the future. Because it's equally as important to look at your mortgage now and what you're getting now, and what's going to happen with that mortgage in the future. How you can pay that mortgage down. What are things that are going to affect you in the future? So I'm going to give you 4 questions that you should be asking of the person that you're sitting down dealing with, whether it's a financial planner or a mortgage planner or somebody at the bank. And if they can't answer these questions, if they can't come up with answers to what I'm about to give you, then you should run, not walk, to the next person in line that's going to take care of your mortgage. So let's start off. First of all, what are mortgage rates based on? Anybody that's been in this business for a long time should have a knowledge about what impacts interest rates, whether it be variable rates or fixed rates. What are the ebbs and flows of the economic factors in the marketplace that are going to affect whether interest rates go up or interest rates go down? They should have an awareness of what's going on in the economy right now to be able to give you a pretty good idea of where interest rates are going to go based on what's happening currently. They should have a pretty good idea of what your financial situation is and what you're going to be most comfortable with. Are you going to be comfortable in a variable? Are you going to be comfortable in a fixed? So they should be able to give you a good idea of what's happening in the marketplace, what interest rates are based on, what are the ebbs and flows, and how that's going to impact you, and what's the best product for you to take given what's going on at this particular time and what may happen in the future. Second question, how will rising interest rates affect me in the future? Again, rate is equally as important right now as looking at where that rate could be in the future. Because you may have a mortgage and you may have that mortgage for 5 years and it may be currently at a low rate, but what happens if that interest rate in 5 years it is a much higher rate? What's the impact on you and your mortgage payment going to be at the end of that term? So again, looking at your mortgage now, we like to look at it now, the rate that you have, and also look at what can happen to you in the future. And we can show you ways that you can plan so that if that interest rate happens to be higher in the future, that there's not going to be any payment shock. Shock being when you get to the end of that term and your interest rate goes from here to here, and your payment goes from here to here. So again, looking at your mortgage now and looking at the future is just as important as just doing that mortgage right now. The third thing is, what strategy do you recommend and why? So again, looking at your mortgage today, I'm going to look at somebody, I'm going to look at their financial situation, I'm going to look at their situation as it exists right now, and I'm going to make a recommendation to that person as to the type of mortgage they're going to take, whether it be variable or fixed, based on their lifestyle, based on their risk tolerance at the current time. And I'm not only going to look at that now, but I'm again going to look at it in the future so that we can look at somebody's lifestyle. And part of dealing with me, when I deal with a client, I look at their situation now when I do it, but a lot of my job takes place after the mortgage funds. To be able to help that client, guide them along the way to look at interest rates as they are right now and to take advantage of things in the future. And that leads me into number 4. What is the commitment to manage my mortgage? Anybody that's doing a mortgage, and if you're dealing with a bank, chances are the bank's really not interested in managing your mortgage for you. They're more interested in getting you a mortgage. Here's your rate, and boom, and away you go. In my case, I've been dealing with clients for over 20 years, and I have kept my clients up to date in the last 10 years with emails, letting them know what's going on in the marketplace, what's happening with interest rates. As a result, my clients have managed to save thousands of dollars because they've been in a position at some particular point to take advantage of a rate decrease or a situation where they could refinance and lower their overall costs. How much management is somebody going to do with your mortgage? And that is another very important key. So again, rate's very important, but all of these factors should enter into your decision as to who you're going to deal with when you're dealing with the single largest loan you're ever going to take in your life. Now, I have a document that will give you a little more elaborate detail on a lot of these things that I pointed out. If you'd like a copy of that, the information will be at the end of this video. Please feel free to email me and I'd be glad to send it out to you. That's it for today's edition of Mortgage Straight Talk. Thanks for watching.